Felix here, and welcome to this pre-market live stream. Consider this. Wall Street runs through this pattern of pushing the market up, scaring you out of your positions, and making money on both sides. And what are they up to right now? Well, just before the Fed decides whether to cut interest rates today, and I want to explain that in a moment, I want to give you some context here of the tactics that they're using again and again so you can spot it. And you'll be smarter and better informed, and you'll be making better decisions now, before this rate cut, and also going into 2025. And then I want to walk you through some exciting things so we can make some money out of this today as well. So let's jump straight into it, and I'll show you a couple of things that the big banks are throwing out there, some from mainstream media, some sort of passed on to their kind of news circle, where they're trying to scare you. And this is the first fear-mongering thing that you're going to see a lot of in the next couple of days. And the banks put this out. This is from Goldman Sachs, and it's going to filter through to Bloomberg and then to mainstream media in the next few days. And they're saying that the PEs, the price earnings, the valuations are the craziest level ever since, well, 1999. So that should scare you, right? Because the dot-com bubble was terrible. And imagine if we have those valuations, But the truth is different. This, to me, is FUD. It's fear-mongering, and I'll explain to you why. But first, they're going to also throw this at you. Panic in Brazil, like anybody cares. Who here has significant exposure to Brazil in their portfolio? Like, anyone? Anyone at all? I very much doubt it, right? If you have a lot of exposure to Brazil, put a 1 in the chat. If you have no exposure to Brazil, or virtually no exposure to Brazil, put a 2 in the chat, right? Lots of Brazil, and I think we'll see that it's mostly 2s, but let me see what we've got there. Felix bought a new jacket. No, I didn't actually. This one's about 15 years old. Seriously, I don't really buy a lot of clothes. I can't be bothered. So George has got significant, you got new holdings, have you, George? Okay, but most of you don't have any Brazil exposure, right? So the headline is kind of, why do we care? Why do we care? We just don't care. It's a lovely country, lovely people, but it's incredibly corrupt and it just implodes with very, very good regularity. So just don't put your money there. And then they're going to show you this. They're saying, look, there are only 1, 2, 3, 4, 5, 6, 7 stocks that are actually going up. Literally, out of the 500 S&P stocks, only 7 are actually going up over the last 2 weeks. And that should scare you. Right? Why should it scare you? Because everything else is kind of in decline. Oh my God, how terrible. But the truth is this. The truth is that inequality is a feature of the system. It's not a bug. It's the feature. The greatest companies rise. The people who put in the effort and learn the skills and are consistently applying them, what do? They make a lot of money, right? Look at funds. 90% rubbish. 10% okay. But it's really the 0.01% that are the glorious ones. And it's the same for the people who work in your company, right? The top 1% make all the money, more than everybody else combined. That is the nature of capitalism. It rewards those who do great work or have great power. That's a different story, but that's kind of the thing. So does this matter? No, it doesn't. It really, really doesn't. And I'd expect this to continue. I'd expect the great companies to massively, massively outperform the market again and again and again. So what does that mean to you? Well, let me ask you this way. Do you want to be part of these guys, the winners, or do you want to be part of the losers? Because there are only 7 winners and there are 500 losers. Now, the beautiful thing is that if you're an investor, you can be part of the 7. Because there is no limit on how many people can make money on the stock market on great stocks. Actually, the more people understand this, the more money you make. Because everybody understands the same thing, then everybody makes more money. But by everybody, I mean the small minority. So do you want to be part of the winners? If you want to be part of the winners, put winner in the chat. And if you want to be a loser, put an L in the chat or a an emoji. Is there a loser emoji? Probably, right? Who wants to make money? I imagine most of you, right? Winner, winner, chicken dinner, says Terry. How come NVIDIA isn't on that list? Look at the NVIDIA stock chart. It hasn't done a thing in the last 2 weeks, right? This is the last 2 weeks. Okay, we got some winners here. Togs, Renee, Doug, they want to be winners. Jip wants to be a winner. Money, Wolfgang, Eileen, John. Okay, now it's coming in too quick. I can't read it all out. Brilliant. So you want to be winners, right? So what do you do to be winners? Well, you become a winner. How do you become a winner? You learn the skills of the winners. You want to learn the skills of the winners? You want to learn how to spot those 7 stocks. And here is what that actually means in real terms. It means spotting big, beautiful, shiny breakouts. So your portfolio looks more like this one here, which is a teaching portfolio of mine, where we are up 300%, 249, 52, 15, 13. These last 2 positions are 3 days old, by the way, right? And my stock portfolio looks not too dissimilar. That's what it means to be a winner. So how do you learn it? Well, you watch the masterclass. Am I promising you 300% returns tomorrow? No, I'm not. I'm not promising you any returns, but I promise to share with you the actual 3 steps that it takes to spot those winners and therefore potentially massively, massively beat the market and be part of the winners. And we have lots of winners here, rather than the losers who just hang about and underperform and therefore live a pretty average life, right? But before we move on to looking at some actual stocks that are on that breakout path today, here is another piece of information that's going to get thrown at you over the holidays. Home buyer affordability. Homes in the US are not affordable. Isn't that terrible? But again, it's part of the system, isn't it? Why are they not affordable? Because the winners have lots of money, so they drive prices up. And then you also have idiotic regulation, which means not enough homes are being built. But do you think people who are winning, do you think people whose portfolios are up 200% this year care that homes are not affordable? No, of course they don't. To them, it's affordable. So affordability is to the average. So what's the choice here? Well, the problem is being average. Why are we average? Well, we all start as average because nobody's taught us. No one's given us the skills. No one's told us what to do. Once you understand what to do, once you know the skills, you are above average. In fact, even just thinking about getting the skills, I would argue makes you above average. But it's the people who actually act on it who get really, really above average. And here is another thing. Look, wages are falling. Well, no, they're not falling, but that'll be the headline. Growth is slowing. So wage growth is slowing down, and that should scare you. Well, which growth? What am I writing screen? Slowing down. Wages will never make you wealthy. There, I said it. Unless you are Jamie Dimon, who gets paid $30 million or something. Okay, that's an extraordinary wage. That's very, very rare. Generally speaking, wages don't make you wealthy. You know what makes you wealthy? Taking that wage, so taking that dollar, putting it to work in the market, and then the market turns that dollar into $2, and then into $3, and then into, you get the picture, right? That is actually where wealth is created. So the whole point of your job or your business is to give you some capital, and then to make that capital work really, really hard for you. You should put that capital into a sweatshop. Make it work 24/7. That's what the money is there for, right? So you don't have to. And then we come full circle to what's happening today. Today at 2 p.m., the Fed is going to decide whether to cut interest rates. Now, Nick Timmy Raus, who works for the Wall Street Journal, I believe, no idea why, he basically is the Fed whisperer. That's what he's known as. He's not a dog whisperer or a horse whisperer. He's the Fed whisperer. So he seems to be lurking in wood-paneled corridors at the Fed, and he gets the inside track. And he's saying they're going to cut rates today. And I agree with him. And then they're going to say, well, We're going to go more slowly on reductions going forward. And depending on how they phrase that, it might cause some fear that rate cuts are over. And you might see some headlines today around 2:30, 3 p.m. New York time that say, Fed says last rate cut ever, something like that. And the market's going to go, oh no, no more rate cuts. We need the rate cuts. It's like our heroin. And let me show you a piece of information that might change your view on that. The unemployment rate is actually pretty high. Since 2022, it's actually gone up. And that's because we are unwinding the shenanigans of the Biden administration in making up millions of jobs that never were. And how do they make them up? They just fill in a little box on a spreadsheet and they send it out to the media, and then there you have it. Jobs were created. So wood panels behind you. I know. That's the irony, isn't it? Lots of wood panels behind me. I do like a nice wood panel. I don't take myself that seriously. So this relatively high unemployment rate, which of course is manipulated and in reality is much higher, will likely give us some more rate cuts. That's what I would argue. And secondly, and even more importantly, what really matters to you and me is confidence in the stock market. In the short term, which is kind of where we live, because in the long term, we're dead. In the short term, the market is all about confidence. It's not really about this number or that profit or this earnings or that CEO, or none of that really matters that much. All of that just feeds into confidence. And when the market is confident, the market goes up. And when the market panics, the market goes down. That's as simple as it is. And how do you know that? Well, you can look at the Conference Board Consumer Confidence Expectation Stock Price Increase Index, which is what this thing is called. And what do you see? Well, it's tremendously going up. And that's because you have someone coming into the White House who uses words like beautiful, huge, and bigly on a daily basis. And that seems to be working rather well. So as long as this chart looks like that, things look good. Now, what if you don't have access to this data? Any stock chart will tell you the same thing. And I'll show you that in a moment. But if you really want to grasp that concept, then, well, best of all, I've packaged it in about a 30-minute lesson that you can watch again and again, and it's completely free of charge. And I know thousands of you already have watched it. Where do you find it? felixprehn.com/get-free, right? There on the screen. It's also in the description down below. It's also pinned to the live chat, thanks to our friend Fox Gaming, who's very, very kind and mightily powerful. So don't spam in here. And there's another way of looking at that. The consumers here again, stock prices, they're expecting them to rocket. Income, they don't think that's going to go up so much. Doesn't bloody matter. People feel richer when their assets increase in value. So learn how to spot great stocks, my friend. It'll make your life 1,000 times more fun. We're going to look at pre-market. Not too bad, right? Nvidia bouncing up a little bit, which is good because it was looking a little dodgy yesterday. And we look at that in a moment. Tesla down 2.6%. Does that matter? Well, I'm still up 249% on Tesla, I think. Is that still the case? Let's have a look. Yeah, so I'm not too worried about it. Why? Because we bought here and there. Why did we buy there? Those were moments where our rules taught us to buy. And Trade Vision, by the way, now our trade tracking is getting insanely good. We've added Webull, we added Trading 212, Tasty, Robinhood, Fidelity. Of course, we already have Schwab and Interactive Brokers and Thinkorswim and so on. So it's going to be very, very cool and a lot more coming up on that front. Shall we look at a couple of stocks here live pre-market? And what I said to you yesterday was this. I said, I don't like, may I draw a line? I don't like that we are below this blue line. Now, what the heck is this blue line? Well, there is a funky thing called head and shoulders, which is a weird little pattern. Left shoulder, head, right shoulder, right? Bit of a Nostradamus looking chap. So this is a shoulder, this is a head, this is a shoulder. And when you drop below the armpits, hang on, I'm going to get a pen. this is an armpit, and that was an armpit, you drop below that line as we did yesterday, then that is often a very, very good indicator of, whoops, I did it again and we're going to drop off a lot. But it doesn't have to be, of course. And today, NVIDIA is recovering somewhat up at $133, which takes us slightly above the blue line here, which is good news, right? So hopefully NVIDIA is going to keep it together. Knees and toes. Yeah. Quantum stocks is a wild bull run. Yeah, that's going to be interesting. Absolutely, that's going to be an interesting story over the next couple of years. Quantum stocks there. If you want some excitement in your portfolio and some sleepless nights and break out into a sweat, buy quantum stocks right now. So Nvidia looking pretty good. Now Tesla is doing the exact opposite. We need to close above armpits. Yes, I would generally recommend you only want to buy things above armpits. This is Tesla, and Tesla is down 2% or something pre-market, 2.6%. And I can just see people all over social media going, the end is near, it's crashing. I told you it was a bubble. Well, as I said, we're still up 249% on Tesla. So am I worried about that? No. There is this myth that stocks should go up, right? So I often say, like, look, we have for example, here, we had a beautiful breakout here, classic textbook. What's with the pen? Classic textbook breakout here, right? And then what did we do? We went up one day, and then for the next 1, 2, 3, 4, 5, 6 days, we went down. Now, a lot of people will say, oh my God, this is a false breakout. It's all going to collapse. It's terrible. No, it's actually part of the system. It's the feature. If you want things to go up in a straight line, I can't help you. Because it doesn't work that way. It's zigs and zags. And then for those of you who understood it, well, here was breakout number 2. And then we went up for 1, 2, 3 days. And then look what, we went down 1, 2, 3, 4 days again. That is just the way the system works. So don't worry if you're buying something and it's down 1% or 2. We generally don't care about moves that are small. We just don't really care. Is that Winston's foot? Winston's foot? Where is Winston's foot? No, Winston is not in the room, I don't think. Is he in the room with you? Rate cuts will help everybody. Yes, I think they will. But there won't be a great boost to the market. And I tell you why. Because the Fed is going to come out and say, yes, we cut today reluctantly, but it'll be the last time for a while. And we're not going to be doing this sort of thing again and again. And we're going to wait and see. And we're going to take a data-driven approach. And I think I could handle those press conferences. You just say very, very little. So is it going to push the S&P up to 6,100? I don't think so. I think it's already baked in. I think it's priced in. I think there is a slight downside risk with it. If they say something a little bit harsher, then we're going to be data driven. If they say we're going to consider the next few data points and then take a view on that sort of thing, that would be a little bit harsher. I know the language is pretty funny over there. Is Winston vegetarian too? No, I did look into that actually, but I think its dogs are not meant to be. I think that's not the way they are built. They need animal protein, sadly. But yes. Are we waiting for a pullback in the close run? I think things are looking pretty sweet. There is a slight risk around Christmas because just before Christmas on the 24th, I think the blackout window for buybacks kicks back in. Now, is that going to make me sell everything? No, but it might explain if things slow down a little bit over the holidays. And Jack says, look, Palantir is down for 2 days, but they were included in the NASDAQ and should have rallied, right? It's buy the rumor, sell the news. That's generally how it works. And, we knew the ASIC, well, were pretty certain of the NASDAQ 100 inclusion about a week before it happened. And I told you about that. So right now, what's happening? Well, what's happening? We're going sideways, right? A little bit of exhaustion, nothing unusual there, a bit of profit taking because people are taking profits after big events. So is it still a rally? Yes, it's still a rally. Does it still look good? Yes. Is it the perfect entry point? No. What about upcoming tariffs? It depends very much, of course, on how they're structured. It could potentially hit certain stocks that make everything, in certain countries. So an Apple or someone like that. Now, are they going to get some sort of exclusion, special dispensation or something? I'm sure that's why they're all bending the knee at Trump's throne. So that the devil will be in the detail. So what do we look for? Well, I look for who's going to benefit from it, right? And there'll be a lot of domestic manufacturers in the US who'll benefit from this. And we can make money out of it. And as I always say, I don't care what stock I make money with because it's irrelevant. The only thing I care about is that I make money, really. And literally, whatever that is, really couldn't care less. And I mean, look at our little teaching portfolio here right now. Okay, SoFi, Tesla, PayPal are making a lot of money. And I love those stocks. I think they're great companies. But I'm also making up 14% in the last 2 days with VIX. Do I care about the fear index? No. What about Bitcoin? Don't particularly care about Bitcoin, but it's up 13%. So just have a rule-based, emotionless routine where you sit down every Sunday for an hour or two and you go through the charts and you pick out the ones that look most promising. You put some money onto that with a nice stop loss and some automated risk management, and then you rinse and repeat and do the same thing every week. And that's basically what I do. And it takes so little time and it's so insanely profitable, at least for me, that I always think, why isn't everybody doing this? And that's what I encourage you to do because it's brilliant. It really is. And, then you can go on holiday. I was just booking a flight here, for example. Going to go on a little trip over New Year's because a friend of mine invited me. So we're going to go and we're going to go on another trip in January. We might go on 2 trips in January. And it just gives you freedom because your money works for you. And I think the real definition of success is time freedom. Waking up without an alarm and knowing that you can do whatever you want today, wherever you want today, with whoever you want. And I think money helps tremendously with that because without money, you never get there. So what do I want to say? Yeah, check out the masterclass down below. I think it'll help you. And then let's run through a few more stocks here in inside Trade Vision. What do we got coming up here with okay, we're seeing a lot more of those these sort of stocks here. Quantum computing, which is a bit of a nutty thing at present. And it's up and it's up and it's up. And let me ask you, where was the breakout? Where did it begin? It was down here. It was at $1.80. So if you bought it because you understood my rules, you'd be up 15 times today. So would I buy it here? No, I don't think so. Volume was tremendous yesterday, so it's probably going to go up some more, but it's a bit late. And I don't suffer from FOMO. So as I say, I don't care what rally I miss. I'm happy to miss lots of them because we participate in enough of them to have a brilliant year. Generally speaking, Martin, if you keep posting the same thing again and again and again, you are liable to get ignored or spammed by Fox Gaming, who is our vicious enforcer of rules here. So please stop spamming. Should I invest in quantum stocks? Well, you probably already are, right? Do you own some Google? Probably, right? Do you own some S&P index or something like that? Most people do. So things like Google or Nvidia will give you exposure to it. Is this investing? I wouldn't call it investing. I think it's riding a wave, and that's okay if you have rules and you have risk management and you know what you're doing. But I wouldn't call it a sort of long-term investment. Matteo, Trade Republic. Are we going to integrate Trade Republic into... I put out on Twitter, we have there's a community now for Trade Vision, which I'd encourage you to join if you're using Trade Vision. And we put out there, or I did, or maybe I just posted it. Oh, sorry, I post so much. I think I posted the ones that we are working on. If I can scroll down some more, and I'll tell you the pipeline that we've got. I don't know if I can find it now. There's a lot of stuff out there, so I might not be able to. But yeah, we are adding all the popular brokers, and that's the intention. Sorry, I can't find it right now. But yeah, we'll keep doing that. So we will very likely also add Trade Republic and everything else out there. Would it be wise to invest in a quantum ETF? Well, it depends on what's in it, wouldn't it? And if it's mostly, say, Google and Nvidia, then you probably already own it and you're just duplicating the thing that you already own. And that's the thing with most ETFs. Most ETFs reflect the large tech stocks, and everybody owns the large tech stocks. Like, I have a very good friend who I finally managed to convince to start investing because the business is doing very well. And I was like, keep saying to him, dude, you're losing out on about 2/3 of your earnings potential because your money isn't doing anything. And now he is. And he said, I bought the S&P, I bought the QQQ, and I'm going to buy lots of Apple. And I said, well, apart from the fact whether or not I think Apple is on a good trajectory, he said, you already own lots of Apple. And he said, no, I don't. And I said, yes, have a look what's in the S&P. And he said, Apple. And I said, have a look at what's in the NASDAQ, the QQQ. And he's like, Apple. So look at these ETFs and what's in them, and see if you already own it. So, because an ETF isn't any different to owning stocks. It's just a one-click approach. Jennifer says your drawing tool isn't working. You can't draw on the chart here, up here. You click on the tab up there, and then you draw a meaningless line somewhere. You mean that sort of thing? It should work for you. If it doesn't, the one I'm using here in the top right it's just sort of for YouTube purposes, so I can scribble on anything. That isn't really part of it. We're also going to upgrade and give us more colors and so on. But these lines and the text you can put in here and so on that says, you know, the text. Oh, there is the text. I mean, if I write, you know, late. Okay, I was a bit too ambitious. Late to party, that sort of thing. That'll get saved. That'll be there forever after. But yes, there might be some issues around the text. Oh, there it is. Interesting. Okay, I'll send a recording of this to the developers, and they'll have a look at it. What's the timestamp? 28 minutes. Okay, 0028. Drawing and text tool. I'll ping that over to the guys, and they'll fix it. Can we have a look at Shopify? Absolutely. We very, very gladly do that. I think it's fundamentally a brilliant business. I think they're doing a very, very good job. They're largely, in fairness, copying Chinese merchants and all their features, and they're building them a bit like WhatsApp is copying WeChat, you know, which is a Tencent owned thing. And does it look good? Well, this was the last breakout here. You would have bought it about $108. We're trading at about $119 now, so it's still pretty decent. Volume is flattened out a bit, but it tends to do that. So it sort of does these shoots, and then it kind of goes a little bit sideways, and or drops and then sideways. So yeah, it still looks bullish. I would argue it's a bullish setup. Just a little bit tired and very, very, very little volume down here, which is okay, but it looks promising. I think the whole sector is quite good. I nibbled on some Etsy the other day, and yeah, in fact here on that day, because we had that nice big volume. You see how that volume is about double what it was the previous days? It was about here, and then it jumped to there, and then, you know, nice jump up there. So at the moment it hasn't done anything. That's okay. Stocks take a bit of time. It might do this, it might do a little bit of that, and then, you know, hopefully it's going to do what I expect it to do. And if it doesn't, well, stop loss will hit us. Are you using Ishimoku clouds, says Darius? No. Why not? Don't understand them. Too complicated. No, my view is I had a phase of running through every indicator there was. Doesn't bloody help. Just use the couple that the most seasoned traders actually use, and keep it really simple. That's what I'd say. Can you use E-Trade, says Keith. Have we added E-Trade yet? Let me have a look. I don't think we have yet, but it's on the list. It is on the list. So it's definitely happening. So we're going to add every major broker to it, and we're also working on automated syncing, which is going to be really fun. Tesla is the Uber killer. I don't think it will be. I think Uber is going to make Tesla a lot of money. I think Uber is going to be one of the biggest Tesla customers. And I think they'll both coexist, because to build out an Uber-like network of data and just people being used to using Ubers, I mean, it's a verb, right? That's Uber. It's very hard to build, and I think Tesla will be very happy to supply robo-taxis to them. And Uber has already said they'd be very, very happy to buy them. So I think it's a win-win, actually. Swing, can you access the masterclass through the Goat Academy community website? No, but it's free at the link down below. You can just watch it anytime. Palantir is shooting up. Is it? Is it? Is it? Is it? Let's have a look. What's going on here? There it is. There she is. Yeah, it's true. It's up. It's up. It's up. So it's 76.64. It's yeah, a positive move. I mean, still within the trading zone of the last week, so it isn't a huge change, but it's positive. So this whole like sideways action, it's fine. You just have to set yourself a stop loss somewhere below it. But at the moment, resistance sits at $80 up here, so we have a little bit of room to rally. Mr. Unlucky says, SoundCloud keeps going up. Keep moving that stop loss up. It's fun, isn't it? Isn't it nice to keep moving the stop losses up? I do it every week. It's amazing. SoFi. Okay, let's have a look at that. Gary and the masterclass. Can you fast forward? Yeah. Just move your mouse over the video and you can do exactly that. Okay, we're still a bit slow here this morning. I'll also make a note of that. We were also fixing that yesterday. Something going on there. There she is. So SoFi is making out with the resistance line at $17 here. We're trading ever so slightly below it, which is pretty good. So we might need to hit that, once, maybe twice, maybe 3 times, maybe 4 times, but eventually we'll break through the 18 or the 17 rather, and I think this party is going to keep going. At least that's the way I see it. At the moment, this looks very, very bullish. SoFi is happy. Indeed, SoFi is very happy. Now, I'm also very happy 3,062 of you are watching this, which is humbling. I appreciate you. I appreciate your desire to learn. To the 570 of you who liked it, I love you. The rest of you, well, there is always room for improvement. And I have only one wish for you before Christmas, and that is that you make a commitment to actually become a tremendous investor, because it's way, way, way easier than you think, as SoFi is breaking up here in North again. And look at what that's doing to our SoFi position, which is now up how much? Something like 320% or so, 319%. That's pretty good, isn't it? Turning $3,300 from, we bought this in September, late September. And now that $3,300 is $13,800. That's the power of buying things at the right moment. So once, twice, 3 times, indeed, a lady. So thank you for the extra likes. Check out the masterclass down below. Get yourself a free trial to Trade Vision. I'm loving how I can see what's going on here with trades, both stocks and options. And there's a tremendous amount of amazing features that we're going to keep rolling out. And the way we're doing it at the moment is that whoever joins, well, you keep getting all these extra features for free, because we love you for supporting us early on. And people who join later, well, they're going to be subsidizing your your cheap subscription. So check it out at Trade Vision. Felix Prehn Trade Vision. Links also down below in the description. And I wish you a beautiful day. Let's see what the Fed says today at about 2:30. And I'll be